Will the increase in property insurance costs be the downfall in the housing market, which causes home prices to truly fall? And you have probably seen prices of your insurance increase year over year. I know for me, my car insurance, I have a basic 2011 Ford Escape. And for the previous years, even last year, I was paying as low as $70 a month for full coverage for that vehicle. And then all of a sudden this year, I saw it went up to $100 per month. That's an over 40% increase in my insurance for my vehicle. And people are seeing this for their properties. Now, I know for me and my property, I haven't seen that huge increase. It did rise, but not to the levels of 30, 40, 50%. Now that property insurance is higher, now that's more added cost on people's monthly payments to buy a house. And I believe this would truly lead home prices to truly fall, because it's not only the mortgage payment and the high mortgage rates that you have to worry about. You have to think of insurance. You have to think of consumers buying groceries, buying gas, buying different things that are increasing in other sectors of the economy. And the fact that property insurance is tied in directly with your housing costs, I think it has a direct impact on home prices going up or going down. Some states are increasing over 50%, and some major companies are completely moving their business out of a state that is usually hit by natural disasters. Now, make sure you all subscribe to this channel. I talk about the housing market, personal finance, and the economy as a whole. All right, so U.S. property reinsurance rates rose by as much as 50% at a key July 1st renewal date, with states such as California and Florida increasingly being hit by wildfires and hurricanes. As we all know, Florida is hit by hurricanes and just a bunch of natural disasters. So with California, reinsurance rates for similar policies in Florida rose 30 to 40%, the broker added. Some insurance firms have pulled out because of the risk of heavy losses. State Farm said in May it would stop selling new insurance policies to homeowners in California. This is super important, and I don't think enough people are talking about this. A major property insurance company, State Farm, we've all seen their commercials, and so many people in California watch their commercials. They're connected with the NBA, with major stars that are from California that play for the different LA, Sacramento teams out there, and they're completely taking their business out of California. You have to think, like, obviously California is a major source of income for them because it's the largest, it's the most populated state in America, and to think that State Farm is losing so much money that they're going to completely stop offering new insurance policies to homeowners, it says a lot. And it does different things for other insurance companies. Now that there's less competition, they can drive up the prices. All major carriers insurance left, and so you ended up with this market which is populated by a large number of very small, very thinly capitalized insurers, which is exactly what you don't want. So yes, you have these major insurance companies getting out of a market, and you're left with smaller companies that are not on a national level that you probably never heard of unless you actually live in that city or in that state. And these smaller companies, they're not heavily funded like a Geico, like an Allstate, like a Nationwide. And so first of all, their insurance policy may be a little bit iffy. You have to make sure that you read everything or read the fine print of what they're offering you. And on top of that, the number of insurance companies being in that state monopolize that particular industry, which in turn, they can increase their prices for their rates. Now, another thing that I want to talk about, and it's not exactly related so much to it, but the earth is hurting, right? Whether you believe in global warming or not, you cannot deny the effects of pollution and the amount of increasing natural disasters that are happening in America, around the world, right? And so with that, that increases the repair costs, right? That increases construction, that increases costs for these insurance companies. And so I think it's interesting that we really need to see a change happen in order for home prices to truly crash and in order for the housing market to truly change. All right, risk modeling firm RMS said in a note last week that this year's hurricane season will likely be near normal. But the firm said that last year, and we had Hurricane Ian happen, that was expected to be one of the most costliest U.S. hurricanes on record. And so you have insurance rates going up, and eventually people are not going to be able to pay these insurance premiums. They're not going to be able to pay all these different things. And so you have even less less buyers going for houses, and hopefully you have less of demand and home prices falling even more. The other thing that I want to mention is this article. This is actually relating to UK, like the UK housing market, but I think it's super interesting because we've been seeing that a lot of times economic disasters may hit other countries or other areas of the world before it hits America. And so we may be seeing that in the UK. So lenders continue to push for higher mortgage rates. And then the Building Society published figures today showing house prices are down 3.5%, which is great, right? So home prices, homes, there's been a housing market crash. And like, this is the fall in house prices is the fastest since 2009, since they had their overall disaster, right? And so you're having home prices fall 3.5% in the UK. Right now we have year-over-year price decline of 0.9%. A 3.5% is more than 3 times a home price drop than obviously 0.9. And so the UK is experiencing that right now, and that's good for us to understand, okay, where are we in our cycle? We're starting to see some relief in home prices, but are we going to have a steeper home price decline? Let's go into the 4% year-over-year price declines happening so we can make it super affordable for people to buy houses. All right, the bank rate jumped from 4.5% to 5% last week following worse than expected inflation data over the past 5 weeks. And so the UK, they're being more aggressive than the US with increasing these mortgage rates, right? Because inflation is still ravaging their area, and so they're being aggressive with it. They're increasing it by 50 basis points, right? We didn't even increase it our last time, which I think wasn't the best move, but it is what it is, right? And so you have the UK doing all these different things in order to truly bring home prices down, and it's showing in the data. Home prices are dropping to its levels like it dropped in 2009 during their housing market crash. All right, you all, let me know your thoughts on property insurance. Let me know down below how much your property insurance increased, or your car insurance, or any type of insurance or cost relating to your house or your living situations increase. Maybe it's your rent. And so this puts pressure on home prices to truly fall if people cannot handle these huge price increases, especially when wages are not increasing that much, right? My wage is not going up 10, 20, 30%. So how are you expect me to pay this extra for this type of cost or that cost? All right, you all, make sure you all like this video, subscribe once again, and I'll talk to you all later.